The FOMC meeting came out exactly as expected, with the inflation raise at 25 basis points, which meant Bitcoin pushed up into a very key level of resistance, and it could potentially be deviating back into the range. On today's show, we're going to have a look at this chart over here, which is our Bitcoin trade, as well as a whole lot more. We'll look at some of the altcoins and assess whether there is an opportunity for a trade or not. So without further ado, let's get straight into the show. And what I wanted to start off with is a chart that we haven't brought up for quite some time. It is the Gaussian channel, a trend trading system over here, or indicator, which you can all put on your charts for free. I'm on the 5-day time period, and essentially what I wanted to show you over here is that any time that price action recaptured the top side of that Gaussian channel historically, it pretty much led into a major trending move. So if you go all the way back from the very start over here, I excluded the very first signal because obviously it was straight up above the Gaussian channel from the beginning of time. So I considered once Bitcoin had its first bear market or mini bear market in 2012, recaptured the top side. How big was the move? In this case, of course, massive 16,757%. Probably not going to happen again. The next one over there, 6,438%, held above and continued up into a bull market and trending move. Then you had the smallest one, which was obviously negated due to COVID, and that was a big move up over here of 122%. And then you had the next one, which was the last bull market in 2021, which led to 603.54% to the upside. So what would that look like if we had, let's say, for example, in the average, we currently have moved from bottom to top 27.92%, which suggests that if this indicator is going to play out in the same way that it did in the prior times, then you should be considering a lot further upside. And what would that look like if we move towards that 100% mark? Well, that which is the lower end targets, potentially you'd be looking at around a $50,000 Bitcoin. And if you pushed up similar to what the previous cycle was and you went up 600%, well, what would that look like? That would be pretty massive. That would take Bitcoin well over its 100K mark. So 600% would take you to that $180,000 mark. Now, definitely not something that I'm saying is going to happen. The interesting part over here is that when it does reclaim is the timing perspective. If you look at the timing wise, how long these green trends hold for, it's much longer than what we've currently seen. So could it be that this is a trap and we're going to go down? Well, of course it's a possibility, but for the time being, as long as these high lows are defended, which you have a very clear and easy invalidation point, is going to be this bounce off the top side of the Gaussian channel where it turned green at $25,000. As long as Bitcoin holds above that, then the hope can continue to remain, and that is your free bullish hopium for today. Your top side of the Gaussian channel, have a look at that number, is coming in at $26,300. You'll see the relevance of that throughout today's show when we look at a bunch of other numbers and key levels in the possibility that price does come down a lot further. The other thing I wanted to mention, when you look historically at this yellow exponential moving average, which is the 21 exponential moving average, and you back test this, anytime that Bitcoin price holds above it, and more specifically when that exponential moving average is angled towards the upside, then it's pretty much onwards and upwards, and any retests that come into that level tend to hold the support and send price in a continuation pattern over there. So where is that level coming in right now? Well, if price were to continue to sell off over here and backtest into the 21 exponential moving average, that is coming in at 27,740, and obviously with each passing week, that exponential moving average is rising up. So the trend is your friend until the very end of the trend, and you should continue to back that trend. Currently, the trend does remain to the upside, whilst price is, of course, caught within a range. We'll cover those range levels as well. When you break out of that range, then you can say the trend is in full force, and that's when you start to expect to see things like this playing out, where you have these massive runs as shown with this Gaussian channel over here. So the Bollinger Bands are squeezing in tighter and tighter. This is Bitcoin on the weekly chart, and you can use those Bollinger Bands as well to find your next key levels of support. So if you look at the middle Bollinger Band, which is coming in at 28,474, another potential area of support, which is going to add additional pressure for a bounce, If you do lose that, your worst case scenario is you're coming down to 25,653. So you can see all the action is in that $26,000 to $28,000 region. It's a very, very key and critical level for the bulls to defend. If they do lose that level, big trouble. You can start to talk about much lower prices, and you could be threatening the uptrend, meaning you're going to break those high lows down and then thus create a new lower low, which is going to be problematic. Then you need to be on lower high watch if it does lose that level when price does bounce. This is now talking to the investors, the high time frame traders out there. I am going to go into the medium time frame as well as the low time frame. You guys know the sequence. We always focus on the investors first, then the mid time frame traders, the guys who are swing trading, and then we look at the very short term, the guys who are taking day-to-day trades. If you appreciate the content, take 1 second out of your day to smash the like button, hit the bell notification, and then make sure you are also subscribed to the channel. So that is the Bollinger Band squeezing in, signifying that volatility is contracting. And usually when those Bollinger Bands start to spread out from one another, that's when you see those big expansive moves like you had over here. You can see the Bollinger Band start to move to the downside and towards the upside, and price rockets. At the moment, we're still in that contraction environment. Okay, lining that 21 exponential moving average up with the orange 200 MA, very important level as well. Where does that come in? As you can see, 27 all the way up to 27.7. Big, strong, important level to hold. The consolidation continues. If you're using it as per the trajectory that price is following, meaning the angle at which price is coming down, if it continues at this trajectory, potentially this consolidation could go all the way into the third week of August, which would be pretty brutal to think this could go on potentially for another entire month when we've already been consolidating for such a long period of time. And if that does happen, then at least look back on the last 3 times that this took place. You want to, or at least 2 times, you want to be aware and understand that these consolidations have led to big moves, right? There's 1, consolidates, big move up. 2, consolidates, 3, big move up. So you know where to be positioned, right? If price is holding above the pivot levels, if support is holding, then you want to be positioned long into the third week of August if it does continue this trajectory. No guarantees. It might already start to rally before then, but that's what I'm watching on the high time frames. Another very important thing which is taking place over here is the DXY. Very key level. We've outlined the range over here. 101.157 is a super key level, and currently it looks to be rejecting from that. Could it be that this is a bearish retest into the underside resistance and there's going to be continuation back down? It is a real possibility. If so, then you'll be looking all the way down to 97.7. In that instance, of course, crypto is going to catch a bid. The stock market's going to catch a bid. The stock market is still strong, especially in light of yesterday's economic data. It continued to push towards 52-week highs, closing at 52-week highs, the highest close in an entire year. That is very bullish. You can't say there's anything bearish about that. Trends tend to continue, and you're moving up higher and higher each and every passing week on the stock market. And I think it's only a matter of time until crypto does recorrelate, because there's a huge discrepancy and decorrelation still taking place, whereby crypto is obviously nowhere near its all-time highs. We haven't even reached the 50% level of the top to the bottom of this range over here. 50% would take you into that mid $40,000 level. We are still yet to even get to that level. So very key. We need to watch the DXY, especially the close of what happens this week. If you see a big bid over here and it closes back into the trend, well, ultimately that's going to add a little bit of pressure. And in that instance, you would expect that this trend would continue towards the downside and ultimately find support between $27,000 and $28,000. Here's your S&P 500. Let's quickly close off all of the indicators so you can see the posturing of that candle nice and clear. Nothing bearish about that. It's just continuing onwards and upwards, just grinding up towards new highs. And that trend will, as I said, probably continue. Yes, there is resistance over here. We have outlined that. Of course, you got the gray box territory, but I've told you before, we've been preaching this for over a week now, that ultimately you expect at the very least probably a consolidation within the gray box territory. And the other possibility is that it just obviously rips straight through. So currently we're only 4.39% away from all-time highs. And when you do hit those all-time highs, that might be the market signal that it's time to go fully back into risk. A lot of sideline fund managers will have no case anymore on the bearish side. They cannot deny a market at all-time highs. How will they justify that to their investors that they are sitting sideline? Consequently, they have to reallocate back into the market, and that overflow of money will spill into crypto, and ultimately crypto will probably also go higher. Lining that up, you do also have the ETF decision-making process, which should be coming up in the first couple of weeks of August, and that is, are they going to deny, accept, or delay? Those are the three options. One of the three of those things are going to take place. I tend to think it's not going to be deny. It's going to be approve or delay. Approve or delay are the most likely outcomes for that ETF, in my opinion. Okay. Let's see the ETH BTC chart, still yet to break out bullish, but it is grinding up into that resistance level, downsloping resistance trend line over here. What do we need to see? Well, if you do want to start allocating from Bitcoin into Ethereum as well as other altcoins, ultimately you need to see a break, right? Let's just shift that up a bit. You need to see this break above, retest the top side of that trend line, and then you've slowed down the momentum. It's not a full reversal yet, simply just you've broken the momentum towards the downside, and then possibly we can look higher. Otherwise, the trend is your friend. The trend is down for ETH BTC, and this is at the end of the day resistance. Ultimately, the main area of interest that I would have would still be target 2, which is all the way down here at 0.0557 on the ETH BTC ratio. Total, we know it very well, continuing to do what we want it to do. If we want alt to eventually run, the best case scenario is that it holds this Wyckoff accumulation schematic 2, which suggests that price, let's just quickly make that nice and bright for you, that price should continue to range within this anywhere between 350 billion on total 3 and up to 400 billion on total 3. The consolidation for a longer period of time within that range will mean that it's just loading up and gearing up, creating a stronger base to later on in September rally up into our sign of strength, and that's where we can start to reallocate from Bitcoin into those alts. So that is your chart for the time being. Everything's holding to perfection. We'll continue to monitor this until the model breaks or until the model succeeds and plays out like we're watching. Let me know in the comments, what do you think? Do you think that by September, this is going to play out into the SOS phase? I'd love to know your thoughts and comments. Is Total 3 going to follow this exact trajectory and get into the SOS phase whereby it consolidates at 470 billion? By September, according to this, it should go. That should hold that phase between September all the way into November, December, and then only in the new year, January, is where you start to see the main markup phase, phase E, where the market really starts to rally. Is it going to play out, or is it going to break this model and play out Wyckoff accumulation schematic 1? So let me know in the comments. Schematic 2, which is this one, that's the upside one, or schematic 1. What do you think happens next for the altcoin market? Okay, probably the cleanest chart that I can give you in crypto right now is this one. Very, very simple, very, very concise. It really just boils down to this range. So you, of course, you have the parallel channel. This means that price is holding within the parallel channel within an uptrend, but still is range bound. You are still range bound. And until we take the liquidity on the top side, which is the liquidity over here, let's change the color to white over there. Until we take the liquidity on this side over here, I will continue to be looking to buy the dip. Any pullbacks that happen from here, I want to see first a proper sweep of that liquidity on the top side. Price should come up here at some point, grab that liquidity, and how high it goes, well, you can use this parallel upsloping channel as a guideline, right? Is it going to reject from the mid-level, or is it going to get much more bullish and get to the top side around that $38,000 mark and then start to pull back? Well, at the moment, we already look to be rejecting. I'm going to zoom in just very quickly for those of you who are new out here. You have the top side range high. The middle is your mid-range, and then this is going to be your range low. You did have a deviation on the bottom side, and I'm expecting still, I have been for months now, the same thing to happen on the top side, a deviation on the top side. So still waiting for that. That should bring price anywhere between $33,000 and $36,000. And now I'm going to zoom in to show you what's going on over here. We have a pivot level. This is an important level, more on a micro scale, so a range within a range. This was your prior range, right? So if you're thinking of it like a range within a range, this is your prior range. If price breaks back into that range, in which point you need to clear and get above 29,660. Any daily closes that occur there, so something like that, would reactivate the long trade idea, and ultimately you can play it back towards the top side of the range, meaning price goes back to $31,500, and then still paying attention at least, and playing the chart pattern that's before you, you do still have a bull flag. This is starting to get extended, so bulls would need to act very, very soon if they want this to play out. If bulls don't take control very, very soon, then ultimately what do you have pattern-wise? You have a potential Bart-Simpson pattern in play, whereby you're going to continue towards the downside. And where is your next major support? Let's quickly clean all of that up again. Here is your next major support. Of course, this is rising. This channel is rising. So 27,400 is a very, very good area of interest to be watching. And another reason that I'm watching this area over here is the inefficiency candles which have taken place on the left hand side, right? The market likes balance. The market likes to be efficient. And when you have a big imbalance move whereby it leaves all players behind, oftentimes price will retrace into that zone, which is why we've shown you on the previous charts how you have, is this chart that we have over here, the 50% levels, right? Here's the 50% levels. 50% of the imbalance level often gets filled. Here it happened again. 50%, the green horizontal line, price wick through, and it eventually gets filled. So could the same thing be happening? It is a real possibility. Using this and following the trend line of the parallel channel, you can see if it happens later on, that level will keep rising. Now we're at 27,800. Let's say it happens over here, 28,000. And as you can see, that number keeps going up because of the rising channel. So pay attention to that. I think that's the cleanest chart. If you want to keep it easy, keep it simple, probably mark out those levels the same way that I have. That's your chart. Range high, mid-range, range low, upsloping channel within the range. Look for confluence. Price comes into the bottom of the channel. It's a good zone. Price comes into the top side. Also a good zone, right? Good sell zone if price comes up like this. Why? Because, well, now you're meeting the top side of the range as well as the middle of that channel. So you got 1 and 2, double resistance over there. It's a key level to be watching. Next, let's go on to Bitcoin using the cup and handle formation, which was also a falling wedge pattern. We broke out of it and we met that exact target, right? Let's quickly focus mostly on the wedge. If you focus on the wedge, there was your falling wedge. Price broke out. Where's your measured move in your target? Comes to the top side. We met that target. Price is now pulling back. So what are your worst case scenarios for the cup and handle formation? It still remains valid even if price comes all the way down. So if you see price crawling back down into that trend line, 27,300, you can see again that 27 to 28K level is so important to hold. Then you'd be looking for a bounce. Where does this start to fall out and fail? Well, ultimately, if you break below these lows over here, which is going to be that on a closing basis, the closing level is $26,000. On a wick basis, you're looking at about $25,000. You don't really want to see price break that down. So until then, the cup and handle formation continues to remain, and your measured move and ultimate target takes you up to $44,700, which is more or less around that 50% mark, right? Let's quickly measure it out. Grab our tool over here. So from top all the way to bottom, there you go. So 50% level of the top all the way measured down to the bottom of the bear market that we've had currently. 50% takes you to $41,000. Your measured move would come slightly above that. And then your golden ratio 6.18 comes in at $46,989, slightly above the target level. So that is another area of interest. What about ETH? ETH is also in a cup and handle formation, which has yet broke out of a falling wedge as well. It did not meet its measured move. Now, you have to keep that in mind. These patterns do fail. They do fail often, right? Nothing in trading is certainty. It just gives you a slight edge, and you're playing the probabilities, right? So if the probabilities are in your favor and you take this trade 1,000 times, over 1,000 times, it should pay you out. You should win the majority of the 1,000 trades that you take. It doesn't mean it'll play out every single time. That would have been the top. ETH did not meet that level. Not to say that it can't. It could just be coming back for a retest of the previous resistance flipped into support. And if it bounces off this level, you're looking at $2,100-ish. And then ultimately the full cup and handle formation, if it meets its measured move, it's going up to that $2,862 mark. Let's also mark out the 50% level and see where that takes us. So from very top to bottom. Okay, there we go. That is the ultimate bottom over there. So that is in line, right? The measured move of the cup and handle comes exactly in line. It's 2,852. And then you have the 618 coming in at, let's just zoom in over there, 3,276. So if this relief rally or the start of a bull run, whatever it is you want to call it, continues, those are the next high time frame levels of interest. Okay, we'll go on to the lower time frames now. 4-hour chart, there is some cause for concern in the medium and short time frame, and it's this. Ultimately, you have the crossover of the EMAs, which is the 50 has crossed below the 200. You also have the yellow 21 exponential below all of those, and you have a clear rejection candle over here. So if I quickly highlight this over here, this candle, what did I tell you yesterday? I said if you're stuck in long trades that you want to get out of, this is where you need to pay attention. When that cross takes place, what happens? It tends to suck into that level like a magnet, and that's exactly what happened. Price sucked into the cross, rejected off that level, and now's where you need to pay attention, right? If this is the top over here, you would expect trend continuation towards the downside. What is the trend? Well, the trend is down on the 4-hour time frame. You can see it very clearly. Lower highs and lower lows throughout, meaning your next level that you want to watch on the low time frame is going to be this box over here as a potential bounce zone in the short term. That's going to be 28,500. I'd be looking for a potential bounce from 28,500. You can see stochastic RSI is also starting to cross back towards the downside, and I think it would look pretty much the same on Ethereum. Let's go to Ethereum. Okay, there's Ethereum. You got the pull up into the cross. There's the cross. You already had the pull up into that cross. Same thing, stochastic RSI is going to be coming down. So you'll be looking for a new swing low, probably around that $1,815, so $1,815 potential bounce. Trend is down, right? Lower highs, lower lows, trend continuation. You now need to look on the high time frame charts and line up where your next major support could be. Let me quickly go back onto this chart just to give you a very solid level of support. Is also going to be, right, your 200 exponential and 200-day moving average. That's both for Bitcoin and ETH. So make sure that you mark that off on your chart. Let's just quickly change this. Portfolio list, ETH. There we go. And you have this one. Let's quickly change that up. You have this one coming in over here on ETH. Around that 1780. 1780 is going to be very, very high time frame support. Price needs to hold those 200 EMA and MA levels and bounce off of that zone. What would be even better is if we have the 200 crossing above the other 200, dark blue crossing above the light blue. That would create an even more bullish scenario over there. Okay, let's go on to the super low time frame. This was the trade that I gave live on the show yesterday. You guys remember it? Let me know in the comments if you did take it. What was the thought pattern behind this trade? Well, we're trading the Monday low to the Monday high. We were looking at the daily open and ultimately putting our stops just below. The first trade over here, I said if you if you're somebody that wants less chance of being stopped out, this would be where your stop goes below, still giving you a 2.53 to 1 risk to reward ratio. At this point, you could take some profits over there and re-add them if you come back down. This is for the more aggressive guys, right? So these are conservative. This is the more aggressive ones. You can see none of this got stopped out. It was onwards and upwards. You're in the money on this trade, but we've hit a key level. And as I've shown you on the 4-hour time frame, this lines up where that 50 and 200 EMA have crossed towards the downside. Bearish cross, which suggests that there is a lot of pressure over here. So be careful. Probably raise your stops into break even. At this point, none of you should lose. What you can do is you can probably, at the very least, have both these trade setups the same. So I'm going to delete the one because there's no point in having two now. We can just focus on this one over here. That's your trade. You are holding above the daily open. If you want to be very, very careful, move the stop into break even, because if you come back below the daily open, well, maybe you're going to work your way back towards Monday lows and ultimately prices will go lower. And then if you get above, right? What happens if you get above 29,534, the yellow line? Very, very, very key level. Well, ultimately, then you have the possibility of compounding this trade and leaving it open for longer. So I don't want to mess with the trades too much. Let me put another one over here. Let's just say, hypothetically, you get above that level, right? This is the trade over here. Then you can target towards mid-range as your first level. And then after that, you can compound all the way up to range high. Why do I say that? I'm going to hide these just to clear it up so you can see everything. Let's do this. Hide. Because at the end of the day, that would still be a deviation, right? A deviation back into your range. Hold that as support. Target mid-range. And then ultimately target back towards the range high. That's a big, big move over there. The deviation is taking longer than anticipated. So there's quite a long time that it's been trying to get back into the range over there. And with that 50 and 200 EMA level crossing towards the downside over there, if it rejects from here, well, ultimately that's showing that it's gaining acceptance outside of the range towards the downside, and therefore you don't want to hold those longs too long. You probably want to cut out if you get back below that daily open, because then you're going to make a new swing low. So in the short term, that's what I'm watching over there. Smash the like button, hit the bell notification, and subscribe to the channel. It really helps to get the show content out there. We're not done yet. I do also want to have a look at the liquidation levels. Before we go into that, also check out BitGet. BitGet do have a trading competition as well, same as ByBit. I need to double check what the prize offerings are, but check them out. There is, I think it's this one, win $50,000 in the trading arena. With BitGet, I think that you don't need KYC. So if you are a US citizen looking for an exchange, there is a link in the description below. You'll receive up to $8,000 in sign-up bonuses if you do use my link. It's my preferred exchange to be trading on, so check them out. Okay, high block capital. Here we have it. Key levels, 28,500 to 28,800. You can see the liquidity over there. Our targets were 28.5, so a little bit lower. You might see a push through that, but then expect a possible bounce from that zone in the short term. Okay. If you look at the cumulative liquidation delta, there isn't that much liquidation levels over here, only 1.2 billion. Usually I would wait for this to get much more out of sync when you're starting to see around that 8, 9, 10 billion worth of liquidations. Then it's a good enough reason to fade it. So inconclusive data over here, we can't really say too much. Market participants were waiting for the FOMC and inflation data to come out, and then obviously get more guidance on what to expect next. By the way, there wasn't much guidance. If you did watch Jerome Powell's speech, he really gave very, very little over there. He just kept saying that gaining control of inflation is their main priority. The market seems strong. It's actually a good thing. And basically, they're not really willing to give any hints of what may come at a future FOMC meeting. So probably range bound. We probably continue with the range, meaning you break back into this level and stay range bound between 29.5 and 31.2 for a little bit longer. Okay. Do we have time? I don't think I'm going to go through too many of the other altcoins. We did have the BNB trade, which was in a short. So we're continuing to hold that as a hedge. We have Curve as well. Curve is in a short. You've almost hit TP1. Remember, halfway through this, you can pretty much start to TP. What else? Let's go to Doge. Doge was one of them. Where is Doge? Where do I have Doge? I know people get so annoyed when I look for it. Guys, the reason that I don't want to type it in is because then I have everything in a specific order. Like I have my watch list with the main coins that I want to be focused on. And if I arrange it in order, it puts everything out of sync. So here's Doge, quickly updating you on Doge. I said yesterday that if Doge comes back, you don't want to see it break below the 200-day moving average. If it loses the 200-day moving average, that would be incredibly bearish. As you can see, it bounced off that level, continuing to hold, but ultimately you'd want to see this run quite quickly. Still range bound, you would simply just be playing it to the top side of the range over here. Look for weakness between 88 or 0.088 cents and up to 0.091 cents. That's where I'd be looking to potentially fade that trade over there. Is there anything else that I wanted to look at over here? GMX, let's see. There was one or two of them. No, not GMX. BGB. How's BGB? No, not BGB. I went across one or two of these today that didn't look too bad. Okay, I'll have to, maybe it was, no, not Rocket Pool. Although it does have an interesting candle over here. Maybe there is a sign of reversal. Look at that. You got that bottoming tail candle over there. So massive, massive wick. Demand coming back into the market. But this thing has nuked. But you have an easy invalidation if price comes back below there. So guys, that is pretty much it. Wait, one more thing. If you look at the bubbles over here, you can see you can win $8 million. $8 million. What will happen if you click this bubble? Let's click the bubble. That's what happens. So it takes you through to our squad details. You don't need to go to the bubble. You can go through over here as well. If you have a look at the description below, click on the ByBit trading competition. Join us in the World Series of Trading. One of the biggest competitions in the world if you're a crypto trader. Up to $8 million. You can buy a few Lamborghinis with that or Ferraris if you want. And use the sign up link below. If you do not yet have a link to ByBit, you need $500 to enter into this competition. We will also, by the way, let me bring up the Discord. I don't know if I showed this before, but let's pull that across. There we go. World Series of Trading competition. There we go. We will be in this competition trading group. We will be dropping trade ideas in there. So there's a channel there called the World Series of Trading. If you use the sign up link below, you'll get access into the Discord. That is your key into the private groups. And that's where we will drop the trades. And I'm not done yet. Another thing I wanted to mention, Brian Armstrong says here, important action that you can take to protect the value of your crypto in America. If you're a US citizen, even if you're not, still stay behind. Today, 2 House committees started voting to take an important step on legislation, which will create regulatory clarity for crypto. They'll continue tomorrow. The bill will evolve during the legislative process, but a vote today for the Financial Innovation and Technology for the 21st Century Act is a vote to protect your crypto, American innovation, and national security. Click this link below. There you go, to email your reps today to urge them to vote yes this week on the FIT 21. And then Josh is showing me as well that I have to go to Solana, so I'm just going to go there quick. Solana, where are you? Where's my Solanas? Did I just pass it? Here's Solana. There we go. Okay, here's Solana. We took a short trade on Solana based on the deviation back into the range. Pretty much, there's your stop if you break back out of the range. You had a big move that went up yesterday. You'd be looking, you would have taken more than already, well, you were at halfway through this risk to reward tool, you would have taken half your TP. So you can pretty much re-add the short over here and then still leave the stop in the same place. Final TP I would take, now you got to rise this because the 200 is rising and it probably will bounce off of the 200 MA, which is the orange line there. So final TP would now be at 2130 on Solana. Probably just going to be a lower high and continuation downwards, but it's very dependent on Bitcoin, guys. Remember, Bitcoin drives the entire market over there, so you need to watch Bitcoin carefully. If Bitcoin breaks above $29,534, then you've broken back into your range, and then you start targeting the mid-range and then the range high, in which case Solana probably does continue on up and stop you out. So that's it from me. Appreciate each and every single one of you. If you do want to support me on the channel, the best thing you can do is use one of the sign-up links in the description below because those are my sponsors. It makes them happy. It gives you sign-up bonuses, and it's a win-win for everyone. I'll see you all on the next one. Have a great day. That's it from me, and cheers for now.